Okay, it's 11 o'clock. We're going to kick everything off. Good morning. My name is Ciarán Hynes. I'm managing partner at COSIMO Ventures. I am delighted to be joined this morning by Brian Elders of Soars Digital Assets. Brian, you and I first met in Hong Kong on a road trip to both Hong Kong and Singapore, which was very interesting, exploring your network out there. And in the truly, I suppose, distributed nature and remote nature of blockchain, which is not Silicon Valley based like the internet boom used to be, you actually now live in Skibbereen in County Cork, isn't that right?
I do, I do. I came back from Hong Kong a few years ago, but Soar's heritage is very much in Asia, and we still have the Hong Kong office there run by Stephen. So yeah, it was a few years ago, and I think it was a lecture we both had in UCD that made the original introduction.
That's right. That's right. Going back to the alma mater. But tell us a little bit about Soars, just briefly, just as an introduction as to what you do. I know you've got your fingers in many pies, but just give us a brief intro.
Well, Soars is named after the Roman god of luck because I think in the world of crypto, we certainly need that as well as professionalism. And Soars started off back maybe 6 years ago when we could see all of this innovation coming through, and we could see that there was people out there who wanted to seize the innovative opportunities of tokenization, but were unsure of how to do that. So we started off helping people to bring their tokens to market, and from there we have grown to a business where we have kind of an investment banking VASP in Ireland, which is Soars, which then has a custodian called Fortuna that it helped to co-found. Black Manta, which is in the regulated tokenization space. And we also have some investments in DeFi, in NFTs, and we have a wallet, which is relevant for this conversation when it comes to the usage of stablecoins. So we're an interesting, growing business in a dynamic, beautiful sector.
Yeah, great. Thank you. And of course, COSIMO is an investor in two of those, Black Manta and Fortuna, and two companies we're very, very excited about. But anyway, we're here to talk about stablecoins.
Yes.
So, for the newbie to the whole space, simply, what is a stablecoin?
Yeah, it's a funny, even for oldies to the space, if you ask five of them the question, what is a stablecoin, you probably get five different answers. So it's I think in its simplest form, a stablecoin is a coin that is referenced to something and it maintains that peg one-to-one. We can go into lots of different definitions, which we have under MiCA in Europe and other things like this, which are seeking to formalize them. But, unlike, we'll call it, other types of assets and crypto assets, the idea is that if it's pegged to gold, that it has a reference value to gold that maintains. If it's dollars, similarly, euros, similarly. So it is using a decentralized system and maybe some cryptography to manage that one-to-one peg.
Yeah. So what are the main asset-backed stablecoins out there at the moment that people might not be familiar with, and in our industry we would be familiar with?
Well, if you look at the market in stablecoins, it's completely dominated by two players, Tether and Circle with its USDC, so USDT and USDC. So they're both dollar-backed or dollar paper-backed stablecoins that seek to maintain parity one-to-one with the dollar. The scale of them is Tether is over 110 billion of asset value. USDC is around 30 billion or just over that. And then beneath that, you have three other stable coins that are above a billion. You have DAI, Ethena, and First Digital's USD. So all of them are USD, and all of them are somehow collateral backed. So First Digital, again, is similar to USDC or USDC. Ethena is a play on collateralized Ethereum, and DAI is a multi-asset backed algorithmic stablecoin. Ethena goes to great lengths not to call itself a stablecoin. They're calling themselves a synthetic dollar, but the intention is the same, which is to maintain a parity with the dollar. Then after that, you have lots of other coins which maintain parity to things like gold and to euros. But when you look at the size of the market, they're all relatively insignificant compared to the big dollar ones.
Yeah, I saw an astronomical figure there on Blockworks just a few days ago that Tether made a net profit of $4.52 billion
And,
just in quarter one
you
of
know,
2024. Obviously, they hold treasury bills, they hold gold, they hold Bitcoin, they probably hold a lot of other crypto assets in there. But that to me was a phenomenal number for, an accusation that we've tried to demystify here over the last few weeks is that, blockchain companies can't make money or don't make money yet. But that certainly, doesn't speak to that.
oh, it's tremendous results for them. They're also famous for having a very tight and small team. So I think, you look at that and you have to congratulate them. They've done a great job. They were the first out the gate many years ago and created a great position on the market.
Yeah, absolutely. I mean, in your opinion, what are the real benefits to individuals or companies of stablecoins in terms of their
Uh,
use?
I think that the simplest thing to say is that they're easy and cheap and effective at transferring value from one person to another. So, especially over a distance, if I'm standing beside you, I can hand you a $10 bill. If I'm in a different country, I have to go through all sorts of jumping hoops and things like that. And that might be fine for certain things, but if you look at some of the innovations that are coming out and some of the future use cases, having a programmable money that is usable and consumable in an ecosystem has absolutely a tremendous future.
Yeah.
So I think we're at the beginning of the story of stablecoins. We might have a couple of big leaders out there, but I think over the next few years, we're going to see all sorts of new innovations and new uses of the technologies that are around it.
Yeah, I definitely think enabling cross-border payments, the lower transaction fees, the speed, but I also see them being a huge, benefit to people and businesses in developing countries, for example,
Of
where
course,
their currencies are not dependable in certain
yeah,
places.
sometimes I think in America and Europe, we forget that the rest of the world doesn't have quite the same stability. And you're right. And, you look with our wallet that we have in its emerging markets, and, the demand for stablecoin is one of the main things there. And even if you look at the character of the stablecoins that are there at the moment, there's more USDT on Tron than there is USDC in the world. And that is driven a lot by the demand of emerging markets. So I think that the emerging markets use case is already there, and we see tremendous uptake of it in those markets.
I mean, I certainly see myself how simple it is to use. Many of the suppliers that our portfolio companies deal with or that we deal with accept USDT and USDC readily now because there's no volatility, obviously, because of what you said earlier, which it's backed one for one by the dollar or something else. And the speed at which we can transfer money, right across the world at low transaction fees is very, very attractive to people. So how long do you think it is before it's going to become commonplace for everybody to have a wallet and be able to transfer or have an exchange account and be able to transfer money in those stablecoin currencies?
You can look forward to all sorts of different futures. Like one of the things that we were recently talking about over in Dubai was some of these future use cases. So conceivably, you could literally pay for your rental car as you drive it, yeah, based upon the time and distance that you went. And you can even take it another level in the car, depending on the devices and services that you use when you're traveling. So all of these things can stream and pay in real time. So that's, there's a large number of really interesting use cases out there that you can do with programmable money. So that's what I was saying. I think we're really at the beginning of what it is. And I think when people begin to have those sort of devices, those sort of things happening with them, then we will see everybody having it because it'll just be part of how things happen. The other thing I would say is that the whole regulatory space at the moment, is really transforming the territory of stable coins. Most countries have gone from having either no specific rules or very little to having quite specific rules around it, which, while it inhibits certain types of innovation, it also makes it much easier for bigger companies and regulated companies and others to use it. So I think we have a mixture of things happening that will enable much greater usage and encourage much greater usage of stablecoins.
Yeah. You mentioned regulatory there. Obviously, we've heard a lot as well about CBDCs or central bank digital currencies. What impact do you think that the progress of those CBDC currencies, it's obviously they're way ahead in some countries as opposed to others. Certainly here in the US, it seems to be quite a slow moving machine in terms of getting to a CBDC. But when we, and I believe, and I'm sure you believe, that every country is going to have its own digital currency in the future. How do you think that's going to impact the likes of a USDT or USDC in terms of, you know, competition and?
It's a funny one. I would say it's not competition. I think that central bank digital currencies will have a space in the world and have a function in the world. But I think that people will still use private money for many functions out there. So I think that we will have both living side by side. And compared to the market that we have today, we'll probably have a much greater amount of digital currencies in action. I look at you know, CBDCs as an important part of how the state organizes its money and interacts with its citizens. And you know, there will be various, you know, schemes and arrangements by the various states to do that. But the needs of a state are very different than the needs of a commercial business. So the way that it's used, the characteristics that it has, where it can be used, what the prices of using it are, etc., will be different. So I look at it as probably a gain, because banks and financial institutions have probably never looked at this space before, now are really considering how to use these innovations because they have to, as eventually the central banks are going to have those type of currencies.
Yeah, absolutely. Absolutely. You mentioned you were at Token 2049 in Dubai. Apart from being completely flooded out of it, what were your kind of key takeaways there? Just moving away from stablecoins, or maybe not?
Stablecoins is part of it. Key takeaways, I suppose, real world assets are a big thing. We see a lot more of them this year. That whole tokenization agenda that we've talked about for many years seems to be reaching a new stage of maturity. So that was definitely a big theme. On the stable coins, we were looking at some of the new innovations that would be possible. We were specifically looking at Europe, and we're looking at asset reference tokens and some of the new products and the new like if you ask yourself what's the difference between a securitized product and that is a commodity versus a stable coin that's a commodity, or an ETF that's a commodity versus a stable coin that's a commodity, and you start slicing and dicing what the pluses and minuses in each of them are, I think that there's some very interesting things that that can be enabled by MiCA coming through in Europe and by producing stable coins that are asset referenced. So I think there was several hours of discussion happened there. And some of that was facilitated by the flooding, because we were all stuck in a room together for many hours having to speak to each other. So
yeah, you
the couple of days that were
yeah, you mentioned MiCA there, which is very topical at the moment. For our US listeners and viewers, just a little bit about MiCA and what it means.
MiCA is the Markets and Crypto Assets Regulation in Europe. It's a regulation, so that means the EU comes out with the law, and it gets accepted in that format in each country. So it's exactly the same across all EU countries, and it looks to put a framework around, well, crypto assets, the markets and crypto assets. So that's different than MiFID, which is financial assets or securities, as you call them in America. So you have in Europe, you now have a definition and law base for financial instruments and securities, and you have definitions and laws and rules and regulations around crypto assets. So it basically brings into the regulatory perimeter a lot of the activity that goes on in crypto. So we now have gone from having no regulated companies to licensed companies, and under MiCA we'll have fully regulated companies in Europe.
It must be great for industry players to have that kind of direction.
Yes and no, it's a plus and a minus. I think that it's coming through really quickly. So the rules are coming through and the interpretations are coming through real fast. So I think it's a challenging time for everyone to keep up with it, but net positive, I hope.
Okay, great. Well, listen, Brian, thanks for taking the time to join us today. And we look forward to meeting up with you again soon, maybe in Skibbereen for a nice pint of Guinness, maybe.
Yeah, my pleasure, Ciarán, and hopefully we can pay in Skibbereen dollars that we issue on some blockchain that weekend.
All right. Thanks again, Brian. All the best.
Thank you. Bye-bye.